long time coming. This is not a surprise. The SEC had gone after very similar groups, including one that the Winklevoss, had invested in. So I don't think we should be surprised by this at all.
Okay, so Gemini Earn actually is the root of where the current ire is directed, right? So what's going on there? What did the government say they were doing?
Well, the government has gone after Gemini, which is the Winklevoss brothers, and Genesis, which is Barry Silbert's digital currency group, is the parent, and they together, according to the government, were basically offering unregistered securities. What they were doing is offering this product that kind of looked like a bank account. They would sort of talk about it as interest rate and talk about it as a competitor to like your savings account. Of course, the interest rates were much higher. It was not a bank, and as the SEC is saying, it was not a security either. And so that's where we are now.
So I guess the question is, what happens since all these folks are kind of like, I don't even want to call them frenemies anymore. They're really going after one another. And these are people who were, in the context of crypto, quote unquote, longtime partners. Max, how do you see this kind of thing shaking out? And is this kind of when in the early life cycle of new technologies, because you've written about this a lot in your books and other things, is this kind of how things work?
Well, I do think there are parallels here in terms of the approach that these crypto guys followed to Silicon Valley. Think back to Uber, right, where Uber basically rolled out this service that was largely illegal in most localities, and essentially dared regulators to make it legal. And I think the crypto guys, including the Winklevoss brothers, basically did the same thing. And they have been for years kind of maneuvering and trying to romance DC while also maybe putting pressure on DC, playing regulators off one another. We saw a lot of this from Sam Bankman-Fried. And now that the music has stopped, now that we've seen some serious issues, we have a real slowdown, we have investor pain that people lost money that who probably didn't deserve it. Now that story is getting harder, and I think that's part of why they're getting more aggressive. Basically, looking, hopefully the government will focus on the other guy. That's the basic idea here.
Matt, I'm curious, Max, rather, is there something generational you think going on in terms of kind of a younger bunch of folks in this industry and very involved in developing it? Is there something, like I said, generational that causes so many to say, I didn't do it, you did it, or just point the finger and it wasn't me.
Well, Twitter's good for that, right, Max?
I mean, I don't know if it's generational or if it's just a response to like, this looks bad. I mean, you've got, I don't really know. The Winklevoss brothers kind of framed their company as this super safe, super secure thing. And now you have customers, hundreds of thousands of customers who can't access their money. And so I think maybe strategically, this is their only option, is to try to pin it on somebody else. I've talked about this, I think, on this show earlier. Maybe it's the SEC's fault. Maybe it's Sam Bankman-Fried's fault. It's got to be somebody's fault as long as it's not me. And I think really that's to deal with the brand damage that they've caused themselves. And this is, of course, some of this stuff the Winklevoss brothers could not control. However, when you promote something as safe, and which I think they did, and you and your customers lose your money, I mean, I think it's reasonable to ask, what happened.
Okay, what I really want to know, Max, is how much of their band's music you listen to report on this story.
I did not suffer that much, I'll say, but although I have listened to some tunes, I guess this was part of a NFT promotion scheme. I tried to figure out, like, were they paying the audiences, because the music sounds so bad that it's hard to imagine somebody like going to going to the show on purpose.
He is a journalist.
They're billionaires, and maybe it's possible, I guess, that the allure here was like, wow, we're going to see these like crypto moguls pretend to be rock stars, and it's hard to imagine that would draw huge crowds. But either way, I mean, it really feels unfortunate. It feels like at a time when they really should have been paying attention, to things like risk and what they were doing with their money, they were, rocking out. And we all need to rock out sometimes, I guess. But again, it's not the best look at this.
No.
Okay, if I was going to rock out, which cover would you recommend that I check out first?
Just quickly, Matt.
The Journey one is the
Don't Stop Believing. I was hoping you would say that.
It's a little pitchy,
I'll be back
I guess,
in 5
a lot
minutes.
pitchy. but
We'll put out the
brace
link.
yourself.
We're going to put out the link. All right. This, by the way, is today's Bloomberg Business Week Daily newsletter. In the newsletter, it's also in the upcoming new issue of Bloomberg Business Week. Thanks to Max and to Joel.
It is 2:53 on Wall Street. I'm Charlie Pellet with a look at today's company headlines. Sources tell Bloomberg Microsoft plans to cut jobs in a number of engineering divisions tomorrow. The magnitude of the cuts could not be learned, but the source says the reduction will be significantly larger than other rounds over the past year. Microsoft shares are up today by roughly 0.4%. Walt Disney says activist investor Nelson Peltz did not present, quote, a single strategic idea despite months of engagement with the company and the board in a regulatory filing. Disney said Peltz's assessment of the company's performance seemed oblivious to the changes sweeping the media business. Walt Disney Company shares today, they're up by 1.1%. The University of Texas at Austin has banned the use of TikTok on the campus's networks after state and national leaders expressed concerns about the social media app's ties to China and the large amount of user data it collects. The school says it's permanently blocking TikTok's access on its systems, prohibiting devices to use the app on the university wired or Wi-Fi networks. We're keeping an eye on shares of Goldman Sachs Group after earnings this morning, down now by 6.4%. Goldman posted a bigger increase in expenses than analysts had expected. Morgan Stanley also after earnings rallying by 6.4%. Again, recapping, we do have stocks trading mixed. Coming up, we will have more on the markets for you. Those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim on Bloomberg Radio.
It's Bloomberg Business Week on this Tuesday afternoon. Let's get a check on the latest world and national news. We got Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden this afternoon is hosting the Golden State Warriors at the White House. Coach Steve Kerr spoke at today's press briefing.
On behalf of the Warriors, I want to thank President Biden and Vice President Harris for the invitation to come to the White House today to celebrate our championship from a year ago. It's a great reminder of how lucky we are to be Americans.
Kerr said he also appreciated being part of a roundtable discussion today concerning gun control, which he says is an issue important to him. This is the team's first visit since Barack Obama's presidency, even though they have one during President Trump's tenure. 1 year, Trump rescinded the invitation. The other year, the team decided to focus on community service. With Russia continuing to pound civilian targets, the head of the United Nations nuclear watchdog says inspectors will be staying in place at Ukraine's nuclear power plants to prevent a potential nuclear disaster.
We are leaving now a group of experts who are going to be staying here permanently, and it will be the same in all these other places.
Rafael Grossi is Director General at the International Atomic Energy Agency. House Speaker Kevin McCarthy wants President Biden and Senate Democrats to sit down with Republicans as soon as possible to begin discussing controls on federal spending and lifting the nation's debt limit.
Let's sit down and find a place that we can protect Medicare and Social Security for the future generations. Let's put our house in order in how we're going to spend, and let's make the investments we need to make America stronger.
Republicans have been demanding deep spending cuts as the price for an increase in the federal debt ceiling, but Biden and congressional Democrats want the limit to be increased without conditions. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Thousands of small businesses benefited from a payroll tax refund and beat the odds of shutting down their organizations. The refund is not a loan and could help your business weather rising inflation and supply chain issues. Learn more at getrefunds.com.
All right, folks, here's perhaps a sign of the times, just an interesting story as we watch our climate get warmer and warmer, and we see, volatility when it comes to the type of weather that's out there. Citigroup and Bank of America, this is a story by Bloomberg News. Citi and B of A have done more to support the expansion of fossil fuel companies than any other lenders, claiming to target net zero financed emissions. This is according to a new analysis comparing industry pledges to action, Tim.
The Wall Street firms joined the Net Zero Banking Alliance when it was founded back in April of 2021. They've since contributed at least $53 billion in combined lending and underwriting to oil, gas, and coal firms whose operations are still growing. That's according to a study by Reclaim Finance. Citi was responsible for $31 billion of that, according to this French nonprofit.
Little perspective, findings are part of a wider analysis of finance industry action since the Glasgow Financial Alliance for Net Zero, of which NZBA is a subgroup, was created almost 2 years ago. Since then, banks have provided at least $269 billion in aggregate financing to fossil fuel companies that are still expanding their operations. Now, keep in mind, the International Energy Agency back in 2021 came out and said that an immediate halt to new fossil fuel or new fossil finance was key to ensuring temperatures don't rise above the critical threshold of 1.5 Celsius. So this is the reason why this is kind of an interesting story. I should say that a spokesman for Citi said the bank's climate strategy reflects its goal of helping to responsibly transition to a net zero economy. There's more. You can hear more of what they had to say. Just head to Bloomberg.com. Meantime, B of A didn't provide a comment in time for publication. But again, there's more to this story, but definitely very interesting. Right now, though, we're going to get back to the overall market trade. Bloomberg's countdown to the close starts right now.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes to go here on this Tuesday afternoon. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenovic. Welcome to our audiences across Bloomberg Television, radio, Quick Take, as well as on YouTube. And Carol, coming off what had been a 4-day stretch of gains for the S&P 500, a bit of a pause, relatively unchanged on the day, with the S&P clinging to that 200-day moving average and trying to cling to that 4,000 level.
Yeah, interesting day, Romaine, and I really do think it's kind of this juxtaposition against, let's see how earnings play out ultimately, and then what happens with Fed policy. So I feel like you're getting that feel and tension within the markets. Having said that, some real underperformance that in a group that we've seen really skyrocket this year, as well as from late last year to now, but a little bit of a different tone today. And we're talking about those Chinese names that trade here in the U.S., down about 3.5%. A bunch of stories that I feel like a mixed message. You had Bloomberg economists expecting a recovery, a bumpy one this year after COVID wave passes. This was a Bloomberg story talking about what economists expect and talking about Goldman, UBS, latest to join bullish bets on global assets as China reopens. That's going on. And then you had China having its population drop last year for the first time since the 1960s. We've been talking about their working age population, Tim, diminishing. So you just feel like, you know, what's going to go on with China? So important to global growth, but I feel like there's a little bit of a tension there, too, in some of the stories.
Well, I can't connect this to global growth at all, or any sort of fundamental story, Romaine. But you know what else has been on a tear?
No.
Is Bitcoin. It's actually up for 13 days in a row. It could be its longest winning streak in more than a decade. In just a short period of time, it's up 25%. It's actually even higher than when it was, what it was when FTX collapsed back in November. I don't know why. I can't tell you why. But it's an interesting one to watch.
Yeah.
Interesting one to watch. I mean, risk sentiment, of course, has shifted. Going to be a 14th straight day of gains if that holds here on the day. You talk about what we've been seeing in the equity markets and the idea that you don't really have much of a sell-off on the day, but definitely a little bit of a walk back and a little bit of a pause coming off what had been a pretty decent rally over the last couple of weeks. The S&P unchanged on the day. The NASDAQ just slightly higher by about 0.2%, and the Russell down by about 0.2. The Dow Jones Industrial Average, the biggest laggard, and that's down by roughly 1% here on the day, Katie.
And you look at the sector level, it's pretty much an even split. You have 6 sectors in the green, you have 5 sectors in the red right now, and consumer staples seems to be wiggling back and forth. But you look at what is winning, it's the technology sector, the chips really rallying today. That's helping up that sector, only up about 0.6% though. And then on the other end, you have materials, you have communication services in the red, but all down less than 1%. Pretty muted moves, I would say.
Well, of course, some of the big individual movers here on the day involve the big banks here, and in opposite direction. Goldman Sachs shares down 6%, Morgan Stanley shares up 6%. Goldman reported higher costs, and of course that's on the back of a revenue miss, and of course a lot of concerns here about some of the longer term projections that they gave here. Meanwhile, Morgan Stanley's earnings weren't really that much better here, but I think the overall numbers there were much more in line with analyst expectations, and that's why you're seeing a little bit of a divergence here in the share prices. Pfizer down about 3.5% here on the day. That's on the back of a downgrade over at Wells Fargo and Coinbase. As you were just talking about there, Tim, the whole crypto sphere rallying here on this day. Coinbase, Marathon, Riot, even MicroStrategy, all moving higher here on the day. What I thought was actually also going to move higher here on the day was Alibaba, because of course all the talk coming in today was about this stake that Ryan Cohen has said to have made into Alibaba, and the idea that he might have actually had meetings with some of these folks all the way back in August of last year, and the idea that he's been building the stake for quite some time. Well, and if that is true, take a look at the chart on the screen. Well, he's already probably profited a little bit off of it.
Yeah, we've really seen a bounce back in a lot of those Chinese names, right, since late last year. And so you're right, a lot of maybe what the upside, maybe that's already built in, at least for a time, as we wait to see kind of the way forward when it comes to China generally and some of the tech players in that country. Having said that, one of the things that you definitely are seeing from the folks out of Davos is what's the outlook, what's to come, what does it mean for Fed policy? And our team on the ground in Davos, BTV, caught up with Bob Prince. He is Bridgewater's co-CEO. He helps manage the world's largest hedge fund. He talked about the return of the boom-bust cycle, but as part of that, he says the cycle will also require more people needing to lose their jobs in order to get inflation under control. Here's exactly what he had to say.
Spending is being financed by income, which is being financed by spending. and that produces a self-sustaining process. And the way you break that process is that you reduce income, and the way you reduce income is layoffs. And the way you get layoffs is you got to hurt, companies have to experience some pain.
All right, that's Bob Prince over at Bridgewater, co-CIO, speaking there at Davos. But I feel like it's something we've talked about a lot, right? That we need to see some more pain in the labor market, Tim, in order for the Fed to get inflation under control and kind of rein everything in.
Yeah, and I don't like the idea of talking about people losing their jobs, because for anyone who's ever experienced losing their job, it's just an awful process. But what we do know is that Federal Reserve Chair Jerome Powell, just a few months ago, called the labor market unsustainably hot. Yeah. And I think one concern that he continues to have is a wage price spiral, and getting that under control is certainly a priority.
Well, I thought it was interesting. I mean, Bob Michael over at JP Morgan was also speaking on Bloomberg, and I think he kind of echoed some of the comments that we just heard out of Bob Prince and this idea. And I just want to read the quote specifically because I thought it really summed it up. It said, the equation is this: inflation doesn't come down until wages do. Wages don't come down until unemployment rises. Unemployment doesn't rise unless we are in recession.
And you think about, again, what they're trying to do with employment, get the unemployment rate up from, 3.5% to 4.5%. That's very difficult to do without going much above 4.5%. That is the big fear. And even as we get all this talk of maybe it's going to be a mild recession, I mean, that is the huge tail risk that the Fed overdoes it here.
Well, and that's exactly it, right? I think there was a column out by our Bloomberg News team, like, what if we get it wrong in terms of what we're thinking about how aggressive the Fed needs to be to get inflation down? Will inflation ultimately really come down? Or there's a lot of questions, I think, still out there, and that's why we really don't know ultimately what kind of recession we could see.
And I think a big question that we still have to consider is the impact that these layoffs will have on people. Who are the people getting laid off? What kind of savings do they have? And how are they able to weather a storm? Because oftentimes in situations like this, the people who have the least are the ones who get affected the most.
Yeah, absolutely well said. And it gets back to this idea of that softish landing, whether it can be done or not. And I mean, I was talking with Katie a little bit earlier. I gave her a great analogy of Kerry Strug in the 1996 Olympics. But
I remember that.
Thank you,
1996.
Yeah, I don't think Katie remembers
I have to
that.
bookmark it for later.
Okay. Well, everything lives on the internet, Katie. You don't
Yeah.
actually have to be alive to remember it.
That's true.
So, there you go.
All right, guys, that's a wrap for now. We're going to continue our cross-platform coverage. We'll be back in less than an hour's time. Radio, TV, YouTube, and Bloomberg Quick Take. We will count you down to the close. Beyond the bell, we'll be back at 4 p.m. Wall Street time. One is raising money at an ever-rising valuation. The other has been pummeled by the market. One has a highly capable number 2 exec, keeping it on track. The other under fire about succession planning. What are we talking about? SpaceX and Tesla, first of all. That's who we're talking about, and they both count Elon Musk as CEO.
Here's the thing, though. Whereas Tesla has withered since the boss embarked on his takeover of Twitter, SpaceX is flourishing. Some even suggest this is because of, rather than, in spite of, its CEO playing a less active role. These are all the words of Lauren Grush. She's a Bloomberg News space reporter. She's got a new feature out today. It's a fantastic one, talking all about what's going on at SpaceX and the success that the company has had of late and even over the last few years. She joins us now via Zoom from Austin, Texas. Lauren, good to have you with us this afternoon. So why is SpaceX doing so well?
Well, I think the biggest thing is that, SpaceX has really well-positioned executives. They have a very capable president and COO, Gwen Shotwell, and they also have a lot of VPs that are already in place with these various big projects that they're working on. I make a note of Mark Juncosa, who recently took over Starship, which is SpaceX's big program to create a massive new vehicle to send humans to the moon and Mars. And it's not just Mark, there are other VPs that are, in key positions that standardize the workflow and make sure the company is running when Elon isn't around.
This is such an interesting story because I do feel like, is this almost a B-school case study of like, okay, here's what Elon can do when he puts, certain people in charge because he has so much under his umbrella at this point. What is interesting about the executives? Who brought them in? Was it all Elon's doing?
Yeah, I mean, these are handpicked by Elon, and let's be clear here. I mean, this isn't to say that Elon doesn't have a profound influence on SpaceX and SpaceX culture. I mean, he is the one, I said it in the article, he sets the long-term vision, the long-term goals. I mean, the express purpose of SpaceX is to get to Mars, right? That is still very much the long-term goal of the company. And when it comes to various design decisions, you know, Elon puts his stamp on those things as well. You know, the push to reuse rockets. You know, even and it also has a lasting impact on the design of certain vehicles, right? One former employee was telling me that, you know, there were plans to propulsively land the Crew Dragon, and while that was scrapped, those plans are still in the bones of that vehicle. So so Elon still is very critical when it comes to guiding the company and also the people that he puts in charge. But when it comes to the day-to-day interactions, the design, and, you know, schedule decisions, that's where you know, he's not as necessary to move those things forward.
So how is, and I know this is a story about SpaceX more so than it is about Tesla or about Twitter, but how does that management style differ from what Musk shows at the other companies that he's at the helm of?
Well, I'm not as well versed in Tesla, but I have been following the Twitter stuff, and a lot of the employees that I spoke to say that, you know, watching the Twitter stuff play out online and in media feels very similar to some of the things that happen at SpaceX. There's a lot of chaos when it comes to meetings being scheduled and then canceled. Also, you know, just him inserting himself into things and making demands. You know, there was a lot of talk about how he likes to make design decisions that, you know, create all of this work, like something might have too many wires. He's always in service of simplifying design. Whether or not that is actually helpful to the design in the long term is up for debate. But, you know, he likes to come in and say, you know, let's get rid of this part, let's get rid of this component, let's get rid of these wires. And then that creates a lot of work for people. And then sometimes that stuff needs to be added back in at the end of the day. And that work will have all been kind of reversed in the long run.
So Lauren, can we go as far as to say the folks at SpaceX are kind of happy that he's been distracted with Twitter right now?
Obviously, I didn't speak to every single employee at SpaceX, but of the people I spoke with, yes, there is a general sense of relief, and just that, you know, it's less unexpected meetings, less unexpected, you know, having to rework their designs. You know, it's more of a semblance of calm because, you know, he's not inserting himself into these workflows that have become standardized and you know, schedules that are more or less routine.
Hey, can you talk to us a little bit more about Gwen Shotwell? She's the president and COO of SpaceX, and she's a name that comes up a lot when you read about the success of SpaceX.
Yeah, absolutely. I think from both internal and external perspectives, Gwen is kind of seen as the one running the show, especially when Elon is not around. She's very much involved in the business side of things as the COO, and she's just kind of, you know, this pillar of strength for most of the SpaceX employees. But it's also important to remember that she does, you know, report to Elon. And so every now and then you'll see her having to execute Elon's vision. At the end of the day, she does report to him. So, you know, if he makes a demand, she's got to do it. And also, you know, you saw that with sometimes she can take on Elon's role a bit when, you know, negative things are happening with the company. We saw this last year when, you know, a bunch of employees had penned an open letter denouncing Elon's tactics or antics online. And, you know, she took it upon herself to fire those employees. So sometimes she can take on a bit of an Elon role as well, but more or less she's kind of the steady hand at the company.
I wonder too, Lauren, and you know, you've done so much reporting on SpaceX, but it's a private company, and we do see the valuation because, you know, the company has recently raised money, so we see what the market is valuing the company at, but we don't see, you know, quarterly earnings from the company. We don't see updates that are required as a result of being a publicly traded company like we do with Tesla, you know, before Elon Musk bought it, like we saw with Twitter. And I'm wondering if that has anything to do with the success of SpaceX.
You know, I would love to know more about the financials of SpaceX. I think everybody would. I know there's been talk about whether or not that valuation is warranted or if it's overhyped. I'll just say this. I mean,
You're talking about a
SpaceX
$140 billion valuation, right?
Right, exactly. Okay. I'll say this: SpaceX has become a major, if not the most dominant player in the U.S. launch market right now. I mean, they are a valuable NASA partner. I mean, they are the Starship, the vehicle I mentioned, has a NASA contract to eventually land NASA astronauts on the moon this decade. And, you know, they have these crazy goals of launching up to 100 flights this year. Many of those will be Starlink launches to build out the company's Internet from Space initiative, which now boasts 1 million subscribers. And and as we wait for ULA to create its next, to transition to its new vehicle, the Vulcan, SpaceX is kind of the main launch provider at the moment, constantly racking up contracts with the Defense Department and NASA. So, I mean, there can be debate over whether the numbers are right for the valuation, but ultimately SpaceX is a critical U.S. company in the space industry right now.
Hey, listen, just one last question, Lauren. Like, I think of back in 2018, it was in the summer of 2018, Max Chapkin and Dana Hull put out a story. It was Business Week, the space issue. And SpaceX's secret weapon is Gwynne Shotwell. And I do think about, you know, her role and her success. She's now been there for several years. And, you know, does the investment community say, you know, as goes Gwynne, as goes, you know, SpaceX? Like, how important is she? As you say, Elon puts his stamp on it and he gets involved in the long vision, but also how, you know, important is the future? You know, how much of it is Gwynne connected to that company? I'm just curious what you hear generally.
I mean, I think it's certainly a major part, you know, and you see this with his other companies, like with Tesla, for instance, doesn't really have a Gwynne equivalent. I mean, obviously they have their own executives, but no one quite like Gwynne in the sense of, you know, how she runs things and handles things. So I think she's definitely a very big part of the successful equation, but it also has to do with, you know, the engineers and the workflows that they have established at the company. So there is that as well.
We think about STEM companies, right? This is really, truly a STEM company.
It doesn't get more STEM than
so,
launching rockets.
Exactly. Great stuff. So glad we got some time with you. Lauren Grush, she's space reporter at Bloomberg News, joining us via Zoom from Austin, Texas, which we, of course, knows where Tesla is headquartered. Everything, right?
Yeah, well, I wouldn't say everything.
Well, that's true. No.
I mean, it was the theme of, what was it, 2021 or 2022, Carol, where all these companies were moving from California.
But isn't that
Texas,
he shifted his headquarters, right?
Oh, yeah,
He sold
yeah.
all his real estate,
Yeah.
Elon Musk, and said, you know,
yeah, but, you know,
planting
as
a flag
Dana
there.
Hull reminds us, there are significant operations for Tesla in California still.
That's
in that
very
Fremont facility.
That is a really good point. Great story. Check it out. Just head to Bloomberg.com or check out Lauren at Lauren Grush on Twitter. Carol Massler, Tim Stanovic, Bloomberg Business Week, right here on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down day on Wall Street, and we have got 39 minutes to go ahead of the closing bell. The S&P back below 4,000, the Dow lower, and we have got NASDAQ on the plus side. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. The Dow is under pressure as Goldman Sachs reported a big earnings miss. The Dow is currently down 360 points. S&Ps are down 6, while the NASDAQ is still higher by 19. The U.S. 10-year yield at 3.53%. Gold is down 6, oil is climbing, and Bitcoin is higher by 1%. Among the main 11 S&P sectors, leaders were tech and real estate. Materials were under pressure, and leaders to the upside in the Dow, McDonald's and Chevron, while Goldman Sachs fell 6.2% and led to the downside. In other news, travelers fell 5% after reported higher storm claims. And in U.S. politics, the press secretary said the administration was not going to negotiate over the debt ceiling. Over in Europe, the ECB may opt for a 25 basis point hike in March after 50 basis point move in February. And wrapping things up, Interactive Brokers and United Airlines report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bunch of EV news out there. We saw a Chinese EV maker intensifying the price war in Chinese EV market, lowering their cuts in terms of pricing. We continue to see that trend. You've got Elon in court defending himself against an investor lawsuit alleging deception about taking the company private. That was a few years ago. I mean, there's a lot, Tim.
Yeah, then you've got battery startup Britishvolt set to go bust. We got with us Ed Ludlow right now. He's the co-host of Bloomberg Technology. And as he joins us each and every week with a roundup of everything that's happening when it comes to EVs. It's plugged in. It's our weekly look at EVs. Ed's in our Bloomberg 960 studio in San Francisco. Ed, so much happening today. Where do you want to start?
Yeah, let's talk Britishvolt, because, I mean, for the UK and the UK's hopes of being a hub, you know, for this electric vehicle transition, it's not great. They essentially are going into administration. They filed or made a filing with the High Court this Tuesday, and according to sources, they're kind of cutting their staff dramatically. This is a would-be maker of battery cells and batteries that had around 300 employees, and they're cutting that back to just 25, according to sources. And this story is just really about a lack of success. They had some kind of soft commitments from some more obscure automakers, Aston Martin, Lagonda being one, but they were never able to firm orders, and it looks as if they just kind of missed the wave of pledges from car makers that need battery cell supply.
Well, that's what I was curious at. Is it a bigger, broader story, or is it just this particular company and maybe the UK market?
I think it's this particular company, to be fair. I mean, what you see are some of the giants of global battery manufacturing, CATL, the biggest of them all from China, but also the likes of Samsung SDI, Panasonic, Envision from Japan. They're just committing so much capex to so many projects to get new supply online all around key markets in North America, Europe, Asia. And, you know, people were excited about Britishvolt because it had on paper everything it needed to succeed here. The backing of the government, at least, you know, vocally, a really good piece of real estate in the northeast of England where the land was cheap. It had access to renewable energy. It just didn't really happen for them, and there are multiple reasons why.
Hey, Ed, before we move to the next thing, I just want to dig in a little more on batteries here, because I think a lot of people who don't know that much about EVs might think to themselves, okay, battery technology, batteries are a commodity. I mean, after all, I can go to Home Depot and get, a couple AA's or AAA's. It kind of doesn't matter which ones I buy.
Yes.
It is not like that when it comes to EV batteries.
No, not at all. So, I mean, for want of a better description, the batteries that you put in your television remote or that go into your old school radio, the battery cells that go into an electric vehicle are very similar. The little cylinders that are made on a mixture of metals, mostly lithium-ion based, but there are other blends that include nickel, cobalt, and those little cylinders are arranged into modules, rows and rows that go into sort of modular rectangles that form the broader battery pack. And, you know, as more and more automakers offer electric vehicle models, there's just a greater demand for supply, but it's not straightforward. You know, there's a lot of wastage in manufacturing battery cells. Many of them get, you know, corrupted and damaged in that process, and so they're wasted. You have to go out and secure raw materials which operate in markets where the price is volatile, and we've learned that over the last 2 years. So yeah, it's not straightforward at all. So if you're a fledgling battery cell maker like Britishvolt and you're trying to get yourself set up and on the map, you're having to deal with the ability to grow and get those raw materials to make your cells, and in Britishvolt's case, a lack of customers, which is unfortunate.
I feel like batteries, if you're an EV maker, it's front and center, top of mind. You caught up with Mark Royce over at GM. Tell us a little bit about the conversation.
Yeah, so I caught up with him because today is the 70th anniversary of the Corvette, and they brought out a hybrid model of the Corvette, not a plug-in, a pure old-school hybrid where there's a normal gas engine and it is supported by a small battery system or electric system that largely is charged from regenerative braking, and it's super high performance, 0 to 60 in 2.5 seconds. But actually the main takeaway was the broader discussion we had about EVs and GM. And right now, GM is racing to bring all these new models online, right? You have the Cadillac Lyriq and the EV Hummer kind of top of mind at the moment, the EV Hummer pickup. And we talked about batteries because I asked, why are you guys so slow in churning these things out? And his answer was, well, to be fair, the supply of batteries has just come online, where literally the facilities where their cells are being manufactured for the Ultium platform, they've just turned those assembly lines on. You can't make the EVs until you're making the battery cells, and they've just started that process, but I'm told that it will ramp from here.
Okay, so the new Corvette, I'm going back to that. The E-Ray is what it's called.
E-Ray, yeah.
Hybrid, though, right?
Yeah, so it's really interesting.
It's not a full EV.
No, it's not. And I asked him, why are you doing this? Is it because Corvette owners traditionally, and I won't try and you know, profile or paint a picture of a Corvette owner, but they're petrol heads, right? They are need for speed kind of people. I said, is it that those types of customers are just not ready for EV? And Mark Royce said, well, it's not that they're not ready for EV, it's just that in this market, the sport vehicle market, this is the path forward that we see. And by the way, this is the quickest production Corvette that GM's ever made. It just so happens that it gets there by using an electric propulsion system to boost the output of the gas engine. I think it's really interesting. I would describe it as a stepping stone, right? Rather than just kind of transitioning completely to electric, like other luxury and sports car makers have done. They're kind of saying, okay, let's dip our toe in this hybrid system and see how it works out. And then down the road, there'll be an iteration of it that's pure electric one day, maybe. We'll see.
All right, we have a little snippet of your interview with Mark Royce. Oh, we don't. I'm sorry. I thought we did. Anyway, it's interesting to see what they're doing. I was just looking online. It looks like the price of the E-Ray is going to start at about $104,000 and then go up to more than $111,000 for the hardtop convertible. So, yeah, these are pretty cool cars that are out there. Hey, at the same time, you know, part of the increased competition is a reason we've been talking about Elon Musk and Tesla a lot
nice
as of
pivot.
late. Thank you. Having said that, Mr. Musk getting a day in court, is that correct?
Yeah, so look, we're going through jury selection right now in a San Francisco court. This is all about the 2018 taking Tesla private at 420 funding secured tweet, the infamous tweet. You know, Elon Musk is being sued by a group of Tesla shareholders, essentially, who said they lost money in the volatility that was caused by that tweet. And, you know, Musk goes into this trial at a real disadvantage because the judge who's presiding at a pretrial hearing already gave his own preliminary findings that actually Musk did not have the funding secured, and he's going to start with the jury from this position and basically say to them, like, I need to tell you from the outset, the conclusion I reached was that funding was not secured. Musk has to destroy that narrative with his legal team. He has to bring in witnesses who can corroborate that the funding was secured. And what's, crucial here is that Musk's wealth is already kind of depleted, right, because of the downturn in Tesla shares, and he's on the hook for potentially billions of dollars in damages that he'd have to pay those investors. So this is going to be a few weeks, this trial. I am fascinated. We have a crack team at Bloomberg News covering it. It's definitely one to watch.
Right, but shareholders have to show that Elon Musk's tweets, right, are, there's a direct correlation to their trading losses. I mean, so it'll be interesting to see where this goes. You're right. He's on the hook potentially for billions of dollars if investors win this case, but it does sound like it's going to be a little tricky here.
Yeah, so, the burden of proof is on those investors to prove that, A, Musk knew that what his tweets were saying were not true, they were misleading, but also, B, the reasonable investor, those tweets were, quote, material to what it caused them or induced them to take action. That said, don't we all hang on Musk's every single character on Twitter, every single syllable, every single letter that he types in a tweet? That's kind of the debate here.
Yes. I'm looking forward to this one.
Yeah.
It's more, just more.
Just more. It's only January 17th, and there's still a lot of Elon and Tesla and you name it news.
Twitter, SpaceX.
Tesla's up more than 7%, by the way, in today's trading.
Oh, look at that.
Yeah, I know.
It's got a ways to go, Carol.
Ed Ludlow, thank you. Co-host of Bloomberg Technology at Bloomberg News. Catch him at 5 p.m. Wall Street time on Bloomberg Television. He was joining us, though, from our 960 studio in San Francisco.
Well, let's now get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Ukraine's commander-in-chief of the armed forces is thanking U.S. General Mark Milley for their meeting today in Poland. The two discussed Ukraine's needs for battling Russia. It was their first face-to-face meeting since the Russian invasion. Well, German Chancellor Olaf Scholz says he is committed to supporting Ukraine as it continues to push back against the Russian invasion, even though his country is facing an energy squeeze. He says new non-Russian energy sources and lower demand have helped, and he tells Bloomberg editor-in-chief John Micklethwaite it's important for NATO allies to remain united.
After the United States, it is Germany and the UK that are delivering the most weapons to Ukraine, and we will continue to do so. We are discussing with our friends, with our allies, with the United States, what is the right thing to do.
Chancellor Scholz, though, would not share any of those private discussions. As world leaders meet in Davos, Switzerland, World Food Program Executive Director David Beasley is urging action on what he calls a major food crisis. He says the war in Ukraine has disrupted markets and magnified food scarcity.
The number has now jumped from 276 million people to 350 million people marching to starvation, not knowing where the next meal is coming from, because Ukraine alone grew enough food to feed 400 million people.
David Beasley says climate change and COVID-19 have also contributed to the global food crisis. Margarine and butter are among the grocery staples costing American consumers more. Analysts say margarine has gone up 44% from a year ago, butter up 31%, and industry experts cite the war in Ukraine for the vegetable oil disruptions that have led to those margarine price hikes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 19 minutes to go ahead of the closing bell. Stocks do remain mixed, with both the Dow and the S&P on the minus side. NASDAQ composite indexes advancing. NASDAQ up 24 right now, higher by 0.2%. Stocks are struggling for direction, with the S&P at 39.93, below 4,000, down 5 points today, down 0.1%. The Dow is down 371 points, down 1.1%. Goldman weighing on the Dow. Goldman Sachs after earnings down now by 6.3%. We've got Microsoft after earnings up by 6.2%. 10-year yield 3.53%. Spot gold down 0.4%. 19.08 the ounce. And West Texas Intermediate crude up 1.5%. 81.09 a barrel. Sources tell Bloomberg Microsoft plans to cut jobs in a number of engineering divisions tomorrow. Microsoft up by 0.4%. Apple is rolling out its first new products of 2023, offering faster versions of its high-end MacBook Pro laptops and the Mac Mini desktop. Apple shares up 0.8%. While the focus today is on bank earnings, we do start hearing from big consumer tech names next week. Anurag Rana is senior tech analyst at Bloomberg Intelligence.
Microsoft's next week, Apple's the week after that, and Apple's going to be very different as well because of supply chain, issues we have seen that they may miss on the iPhone side. So the question really is, how's the buy side going to treat that? Because, in our view, whatever we lose in this quarter, we're going to gain back in the next quarter.
And Apple shares right now up 0.8%. Also reporting in the next couple of weeks, Alphabet February 2nd. It is down now by 0.5%. Recapping, stocks are lower. S&P down 0.1. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The ERC isn't a loan. It's money your small to medium-sized business may be eligible to receive for keeping employees on payroll in 2020 and 2021. Get an estimate of your company's potential refund today. Learn more at getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got 17 minutes left in today's trading session, getting ready to wrap up the first trading day here in the U.S. of the week. And of course, Charlie breaking down equities. We're off our highs and lows of the session. Got a lot of economic news, a lot of earnings to get through. I feel like we're going to trade from day to day based on the tone in the news, Tim.
Yeah, I think so too. And I mean, I certainly see that playing out today with what's happening to Goldman Sachs shares as well. Let's get into it with Dana Doria, the co-CIO of the independent investment advisor Envestnet. Dana joins us this afternoon via Zoom from Pennsylvania. Dana, good to have you back with us. How are you?
Great. Thanks for bringing me on.
Yeah, thanks so much for joining us. So what's your outlook for the year? I mean, I want to kind of move beyond today's trade and get an idea on what you're thinking for 2023.
Well, I think the consensus at this point has been first half of the year is going to be difficult still. We've got a lot that the markets still have to work through, not least of which, of course, is the coming debt ceiling fight, but also, continued need for the Fed to sort of stay firm on rates, even if hiking can be reduced a little bit. The notion of a pivot is probably unlikely, at least until the second half of the year. But there is a growing chorus, I think, around the notion that, second half of the year could pick up. And so, kind of in our space, talking to advisors,
Connection lost.
Home offices, it really is about sort of having the discipline and hanging on and looking forward to that comeback.
Hey, Dana, your firm, you guys offer investors ETFs, mutual funds, liquid alt portfolios. You also do fund strategist portfolios that combine a bunch of strategies and are managed by independent firms. Where are you moving money to? Where you're allocating more new money to right now, and why? Give me an idea of where it's all going.
So I would say, of course, we facilitate portfolios across any number of different types of strategies, and very strategic for the most part. Advisors look to keep their clients in portfolios that are allocated around their risk tolerance, right, their discipline. But what I'll say is, at a high level, in answer to your question, fixed income is where a lot of interest is being pointed right now, and of course it's because we've experienced a lot of the pain of rising rates already last year. Much of what we expect is going to happen in fixed income has already been priced in at this point. And whereas fixed income took a real beating, you're now in a position where there's concern about recession. That standard 60-40 that was really had a problem last year, and sort of a historically unprecedented double-digit losses on both sides of that 60, that 40, the equity fixed income. Now we're in a market that looks more traditional to what we would expect in terms of, okay, the fixed income position provides ballast to that portfolio. We're not expecting huge losses there anymore because rate increase is already there. And I think a lot of clients too, in the run-up preceding all of this, you get overweighted in equities. And it's time to take a look at, what that mix is, and do you have enough fixed income in the portfolio?
What about when it comes to regions of the world where you're advising clients right now to put their money?
Yeah, I think valuations favor an international look. So, I mean, of course, markets are cyclical. What's worked in the last 10 years doesn't necessarily tend to be the best place to be for the next 10 years. So when you're looking at these portfolios that have become very U.S. biased, and, the notion that, hey, how much international do we need? So many conversations over the last 5 years around, do I even need international stocks in the portfolio? What's the real outlook there? I think we're increasingly seeing an interest now in exactly what you're saying, and I would recommend, of course, a diversified view on international markets. We can talk about specific regions, and China is always one that, there's a large interest. If you have international developed and emerging markets, you probably have a big position in China. So I might say hedge your bets on that, and have a little bit of a cap or a cap on the Chinese position. But U.S. to international, you really should be looking at having that overseas diversification in the portfolio.
That's interesting. Yeah, maybe, I was talking about China earlier because I do feel like we continue to get these mixed signals about people saying, whoa, China reopening, what the opportunity for China going forward this year as well as globally. But then at the same time, there are concerns that it's not going to be a straight move forward, if you will. You mentioned international. Emerging, though, if we kind of put China aside, emerging international, or do you like the developed play internationally?
I do think it's both.
Okay.
So you're emerging has the benefit of still being somewhat lower correlation to the U.S. than international developed. In fact, there's been some pretty good research around the fact that if you're doing an international focus, and retail investors, right, they're probably investing in areas of that market that are large cap for the most part, you're getting a high correlation to U.S. stocks. Are you really getting the diversification benefits that you're looking for? Really, if you want to have a diversified exposure where you're actually hedging your bets on the U.S. side a little bit, you think about these large international companies, right? They're multinational. The revenue that's coming, whether the U.S. or overseas, in these large companies, it's very high correlation. But if you get into international smaller, mid to smaller stocks, international small value, and emerging markets, you start to now get to areas of the market where you're seeing the correlations a little bit lower, and you're getting some of that diversification benefit. We also, there's an expectation that the dollar is not, strengthening this year the way that it was last year.
Right.
And that, of course, helps your translated returns.
All right, we're going to leave it on that note. Dana, thanks so much for weighing in. Dana Dioria, Co-Chief Investment Officer at Envestnet, joining us via Zoom from Pennsylvania on this Tuesday. Having said that, we've got about 11 minutes left in today's trading session. We are seeing certainly the S&P and the Dow just a little bit off its lows of the day, but it's really the Dow, as we talked about at the top of the show, really feeling it on a percentage basis, Tim, down about 1.2%, but the NASDAQ and the S&P pretty much flat right now.
That's thanks to Goldman Sachs Group shares, which are dragging the Dow down lower. The NASDAQ, though, higher, Carol. It's in the green by 0.05 of 1%. I'm always looking for the silver lining.
I call that unchanged, kiddo.
Okay.
All right, stick around. More to come on Bloomberg Business Week right here on Bloomberg Radio.
It is 3:53 on Wall Street, minutes to go ahead of the closing bell. Now a look at today's company headlines. New York City-based Goldman Sachs did post a bigger increase in expenses than analysts expected as it set aside more for compensation in the fourth quarter. Goldman shares, they are down right now by 6.8%. Also out with earnings this morning, we heard from Morgan Stanley. Morgan Stanley's revenue narrowly beat analysts' expectations on a wealth management record, even as the firm's traders fell short of estimates. Wealth management, where Morgan Stanley benefited from higher net interest income as a result of rising rates, reported revenue of $6.62 billion. That was up 5.9% from a year earlier. Morgan Stanley shares are up now by about 5.7%. Sources tell Bloomberg Microsoft plans to cut jobs in a number of engineering divisions tomorrow. Now, the magnitude of the cuts can't be learned, but the source does say the reduction will be significantly larger than other rounds in the past year. Those cuts impacted less than 1% of the software giant's workforce of more than 200,000. Microsoft shares higher, little changed, up now by just about 0.1%. Walt Disney says activist investor Nelson Peltz did not present, quote, a single strategic idea despite months of engagement with the company and the board. That came in a regulatory filing. Walt Disney shares today, they are trading higher by 0.6%. Those are the company stories we're following. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Tuesday. Carol Masser, Tim Stenevec, live in our Bloomberg Interactive Brokers studio. You know, we didn't really talk too much about this. Romain mentioned it in our simulcast, which, by the way, we're going to go back to our TV colleagues, count you down to the close today in just a few minutes. But he thought, I guess, maybe Alibaba or shares of Alibaba should have been maybe moving a little bit more
Yeah,
today.
I was pretty surprised about this as well, Carol.
Yeah.
So here's the story. We learned about it late yesterday. Ryan Cohen's decision to invest in Alibaba Group will be a key test for the meme stock icon in a country where individual attempts to drive change at companies and generate stock returns remain a novelty. So you know Ryan Cohen. Ryan Activism.
Activist.
Yeah. You know
That's
him
his
as an activist
superhero.
investor, right? He's fueled rallies
Alter ego.
in companies like, he is a good, that would be actually pretty good. Kind of like a nerdy superhero show though, right?
Yeah, exactly.
Yeah.
That we'd all really be obsessed with.
Yeah, I don't know how
Sorry.
big the market is for that. Maybe that's why I do this, and I'm not sort of like in
count it
show development. GameStop, though, is one of the companies. Bed Bath & Beyond, and then of course he built Chewy.com into a $3 billion pet supply firms. Alibaba, though, Carol, that's a different kind of story.
Well, this is what's interesting, right? This is a guy who has just bet big time on the meme stocks, right? This is not what Alibaba is. This is a legit company, huge company, one of the big, internet players of our time globally. I mean, we're talking about, I'm looking at the ADR, $305 billion market cap. So it's a very different, there's fundamentals, there's earnings, there's stuff to it.
There is, and you talk about this all the time, Carol, the way that these companies have been on a tear lately. I'm going back and I'm looking to its October lows. Alibaba is up 82.5% since then.
Yeah, up 31% alone this year. So I guess maybe why, this is the thing we don't know about. I talked about this earlier. China, I feel like we continue to get kind of some mixed signals about the way forward. We've seen that 180 when it comes to COVID zero policy and opening, so important to the global economy. And yet, it does seem like China is very supportive of its industry, and yet it'll do things like, wait a minute, but we're going to still have a lot of control over you. And that's why, what is Alibaba in the future?
It's not GameStop. It's not Bed Bath & Beyond.
But there's some big moves, right? Like a lot of
but
play.
I mean, not like thousands of percent like some of these other companies.
Yeah, I know. Very interesting. All right, coming up next, we're going to be joined by our TV colleagues, our cross-platform coverage, Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romain Bostic alongside Katie Greifeld. We're counting you down to the closing bell, and we're here to help take us Beyond the Bell. It's a global simulcast with Carol Masser and Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio Quick Take, as well as on YouTube. Carol, a lot of events this week that I think are going to push markets around in either direction here. At least for today, it seems the market's kind of stepping back and waiting for some of that to unfold.
Well, I think it's one of those days. Just look at the big banks, right? You get Morgan Stanley like hitting it out of the ballpark, or so it seems in terms of the investor reaction to it. Then you've got Goldman going in the other direction, right? One was up about 6%, one was down about 6%. I just feel like there is this, kind of churn within the market. Even if you look at one specific sector, Tim, you can get two different stories.
Does this year, the sense that I'm getting from speaking to our guests, the analysts that we have, the market participants that we have on the program, that this year is just really choppy to begin with because there's so much uncertainty out there. But then we get to the second half of the year and people are saying, okay, well, things could get a little bit easier. It's kind of the sentiment that we just heard from Dana DeOria, the co-chief investment officer over at InvestNet, that said, we got this debt ceiling fight in the short term. The idea of a pivot in the short term is unlikely. But we could start to see some sort of pickup in
And
the
where
second
did
half
she
of the
say
year.
money was going? She was saying money was going into fixed
income, the return of the 60-40
Not the equity
portfolio.
necessarily.
I've heard that a few different times, a few different ways, just in the past couple of weeks. But I think it's interesting that there seems to be a lot of optimism around the second half of the year, because that's theoretically when the Fed maybe will start to cut rates if you're looking at the bond market, but that's not necessarily good news.
Certainly not here. You put it all together here. You have a mixed bag for the markets here on the day. We'll start off with the Dow Jones Industrial Average, because that was actually the big laggard. It's going to finish lower by about 1% on the day. Obviously, a big part of the drag coming from Goldman Sachs, which is down more than 6% here on the day. But more than something like 24 stocks in that 30-member index were lower on the day. The S&P 500 down about 0.2%. It could not hold that 4,000 level. It looks like it's going to close right around 3,991. We should point out that that 200-day moving average has been held. The 200-day sitting at 39.78, so we still remain about 12 points above that. The NASDAQ going to finish the day in the green, up by about 0.1%, and the Russell 2000 in the opposite direction, lower by about 0.1% on the day.
Yeah, that 200-day on the S&P continuing to tease us, right? And we'll see where we go from here. Having said that, if I look at the S&P 500, most names in the average lower today, 308 to be exact. Katie, we got 190 gaining some ground, and I know you're going to dig a little bit deeper into those industry groups.
Yeah, if you look at the industry groups, it's also mostly red. We have 24 of them, just 8 are in the green right now. Autos, by far and away, the winner there. A lot of that is Tesla, and that's leading that industry group up more than 5%. So that's the good news. Much more subdued gains from there. You have chips doing well, and at the bottom, telecom not doing too hot, down almost 2% or so.
All right, going to interrupt you here, Katie. United Airlines crossing the wire right now. Here are the 4Q numbers. The EPS, we'll start with that on an adjusted basis. $2.46 a share. The street on average was looking for $2.12, so that would be a beat. Operating revenue coming in at $12.4 billion. The street on average was looking for $12.23 billion, so that also is a beat. A couple other quick numbers here. Revenue passenger miles coming in slightly higher than expected. And then I thought this was an interesting number. Available seat miles, 64.29. That's just pretty much on the nose of what the street was looking for. So all in all, the numbers look okay. And here's your forecast coming across the wire right now. 1Q adjusted EPS being forecast a range of 50 cents to $1. The street was looking for 22 cents. So the lower end of that range is almost twice what the street was looking for on average, Carol.
Yeah, that's pretty impressive, and you're seeing it in the trade after hours, up almost 3% on United Airlines. Another stock that's gaining in the after hours, Interactive Brokers. It is now up about 1.25% here in the aftermarket. Let's get to fourth quarter adjusted EPS, 13 cents better than what the street was expecting, coming in at $1.30 versus the estimate of $1.17. Fourth quarter adjusted net revenue also coming in stronger. We're talking about $958 million versus an estimate of $932. Fourth quarter average customer margin loans, $39.28 billion. That's pretty much smack in line with what the street was expecting. Fourth quarter total customer accounts, key metric, 2.09 million. That's a little bit, a hair light. The estimate was 2.1 million. And the average customer credit balances, 93.4 billion. Tim, the estimate was 93.61 billion. Again, the stock of 1.84% in the after hours.
All right, I want to get back to United Airlines, that company reporting earnings just moments ago. I've been digging into the press release. Shares of United after hours up more than 4%. The company spending a paragraph talking about how it was able to recover quickly from irregular operations in December as a result of that winter storm Elliott. The company said that 36% of all United flights were exposed to severe weather. Despite the impact, 90% of those customers made it to their destination within 4 hours of their scheduled arrival time. The company specifically calling out investments in its people, resources, tech, and infrastructure over the past few years with its ability to recover from significant weather events.
Take that, Southwest.
I mean, that's exactly what I'm seeing right there, right?
Well, $8.5 billion in adjusted CapEx for the year. That's the forecast they're giving. Two other interesting data points that really jumped out at me, though, out of that release. One is on capacity. They're actually saying the capacity in the first quarter is actually going to be up by about 20% versus 2022. And remember, this has been the big bugaboo. I mean, they've actually made a lot of money by keeping capacity constrained, but of course, we know the customer experience might have suffered a little bit here for some of these airlines. Anyone trying to book a flight knows it can be hard to even get a flight, and then if you do get one, of course, you could pay through the nose, and God forbid, if one of your flights get canceled, you're going to have to find other plans here. The idea that they're expanding capacity, I think that might be a good sign, not only for the business, but also for the consumer as well.
And again, you can see shares moving 4.5% higher after hours. You look at how United Airlines is doing over the past year. Shares are up over 12%. Just for some context, you look at what's going on at Delta over the past year. Those shares down 3%. To bring it back to Southwest, those shares down almost 19%. So United Airlines really dominant, at least when it comes to the markets.
All right, so you mentioned Delta. I'm taking a look at Delta in the aftermarket, and it's up about 1.5%, despite maybe some concerns that we had last week. I look at American Airlines, it's up about 2.4%. So what we got from United, Tim, just lifting the overall sector in the aftermarket.
Look, I wonder, you know, as we continue to hear from these companies, we got Netflix later this week, we got regional banks tomorrow. I asked the question, Romaine, about what it tells us about the strength of the American consumer and the question about whether or not we are going to be in a recession. If it's going to be a shallow recession, if it's going to be a deep recession. And when I see results like this about capacity going up for an airline, I think to myself, well, the demand to spend that money, it's still there.
Yeah, and we know that. And again, yeah, I mean, we talk about the demand. We know the demand was there. It was really just about the balance of how you run your business. And I think
But it's
the idea.
still there.
Well, but the idea, I mean, you talk to some of these strategists, they say, okay, well, was this all just the revenge travel and that's going to subside? But I mean, it seems like most of the people we talk to on Bloomberg Television, they're saying, look, this is sustainable. And then if you do get a meaningful uptick in business travel, that just becomes the icing on the cake. I do want to point out real quick here, because we talk about earnings season and the read that we're going to get on the economy here. I mean, you mentioned the regional banks get tomorrow, but we get a lot of those industrial companies, you know, like the trucking companies like J.B. Hunt. I think we get Prologis, a big warehouse company as well. Alcoa, of course, is a big aluminum maker. So I think we're going to get a much better sense here of how certain pockets of the economy are holding up. And if the results are similar to what we got out of United, you know, this could be the all clear for a certain type of investor.
And this is the skew, really, because what you just mentioned, the J.B. Hunts of the world, the Alcoas of the world, that's probably a much better read of the economy. But then you think about big tech reporting next week and the sway that has over the stock market. If you think about the benchmark math, maybe that's more consequential.
Do we care about Netflix the way we used to? Is that going to be the bellwether?
I don't know if Netflix is the bellwether necessarily, but it is, you know, the unofficial start of tech earnings.
I do care about the new ad-supported tier to the extent that, you know, how ad spending has been, because we saw the reporting earlier this year that, you know, they weren't actually able to satisfy the number of views that they said that they would be able to. And we've had so much weakness in the advertising market over the last few months, and it's at social media companies. So that's interesting to me. But I agree, it's not necessarily the bellwether it used to be.
I mean, the advertising market is brutal, and Netflix is going to learn that the hard way. But, you know, look, we know they have the content, and, you know, they obviously have a good base, so maybe they'll make it work.
Well, and I do wonder how much of the market is going to be kind of cut into different sectors, right? Something like United Airlines, I feel like that's old economy to some extent versus a Netflix or some of the tech names that just couldn't do anything wrong during the pandemic. It seems like Netflix has had quite a bounce. How much of the optimism is already built in? So how they do, you know, do we see the stock move higher or lower based on that? So I don't know. I really do feel like we're back to a market where you really have to look at a company specific, industry specific, and really look at the fundamentals.
Can I bring you just another quick redhead crossing the wire? This one, Moderna, shares up about 5% in after-hours trading. The company saying that phase 3 study of that RSV vaccine candidate has met targets. Again, this is coming specifically out of Moderna, basically announcing that their mRNA 1345 that a lot of people have been tracking did meet the primary efficacy endpoints here. So this is obviously, it could be a big deal for Moderna, which of course is trying to sort of expand on the technology that led it to that COVID vaccine and apply that, of course, to other applications as well.
Yeah, right now Moderna up about 7% in the after hours. Interactive Broker up about 2.6, excuse me. And then, of course, we're seeing the airlines all move up on that United Airlines report. All right, lots of earnings to come this week. We'll be all over them, guys. That's a wrap. Our cross-platform coverage, radio, TV, YouTube, and, of course, on Bloomberg Quick Take. We will see you again, same time, same place tomorrow. All right, everybody. A lot happening already on this Tuesday. We're delighted to have a guest back with us in studio because what's interesting is we just talked about earnings, but don't forget we have a lot of economic news coming out this week, including we'll get a read on the consumer with retail news, retail data, I should say. That's 8:30 a.m. Wall Street time tomorrow. This is so key, Tim, in terms of what's going on in the retail sector broadly, but also then what it tells us about the U.S. consumer. So key to economic growth and so key to really kind of what happens in the financial markets.
Yeah, I mean, remember last week, the University of Michigan preliminary sentiment index showed that consumers are not ready to tighten their belts just yet.
Nope.
Despite warnings of a looming recession. With another view on retail, we welcome back Shekhar Natarajan, Executive Vice President and Chief Supply Chain Officer at American Eagle. He joins us right now in our Bloomberg 1130 studio. Good to have you with us, Shekhar. How are you?
Good. Good afternoon, Carol and Tim.
Happy New Year.
Happy New Year, yeah.
Happy New Year to
Will
you.
it be a Happy New Year?
Yes.
Well, that's what I wanted to start with, Shekhar, is,
You laugh. You did not answer, but go ahead.
We'll talk about supply chain, in detail over the next few minutes, but I want to know what you're planning for 2023. Carol talked about this idea that the consumer, we're getting we've got retail sales later this week, and it's key for understanding how the consumer is feeling. But how do you think the consumer is doing?
Well, I think the consumers are definitely beating all expectations. I think we all talk about recession, but the spend has not receded yet. There's every retailer out there has experienced good sales during the peak season, and at least that's what the MasterCard data says, and that's what basically the consumer sentiment is.
Is that what you saw?
I'm not allowed to talk about it.
I know. I was just, I knew that, but I was just trying to get you.
I'm so sorry. I disappointed you. But that said, I think last year was a year of just-in-case inventory in the system, primarily because the supply chains were all
You have a month before you report. You can share. No, anyway, keep going. Keep going.
So we definitely every retailer had just in case inventory. The supply chains were slow, unpredictable. So people actually ended up carrying more inventory. Just to give you some context, 800 million square feet of warehouse space in 2022 was used for storing inventory.
That number means nothing to me.
So it's 8%. It's 8% of space.
No, it sounds like a big number to me, Carol.
It is.
I know, but against
10
what?
million square feet. It's a large.
What do they normally hold?
Well, you don't have that. Basically.
You don't normally have any of that.
Yeah. So we should see massive rationalization of inventory this year. People have begun to kind of ration the inventory back in the system.
Because the supply chains are working?
The supply chains getting the product into the country is working. But basically, there's inflation still lurking at us from when it gets into the country to the doorstep. When you start looking at basically what FedEx and UPS have announced, they have announced a 6.9% surcharge on every package, which means 1 pound package that you ship less than 200 miles for 1 pound is going to cost $10. It costs 8 cents to bring a unit from China to US. Wow. It costs $10 to ship a package for 1 pound.
Because it's so expensive in the U.S.
Absolutely.
It's the last mile, right?
It's the last mile.
Isn't that what makes it expensive?
Very much so. But we live in a very fragmented system.
Right.
Right? So we live in a very fragmented system because basically everyone is sitting in the center of the country and from a warehousing perspective, distribution and trying to access the customer.
But Shekhar, the problem is that unless you're Amazon and you have your own network of delivery drivers, which is by not any means how they all are shipping, how Amazon ships everything, you're all kind of dealing with the same deck of cards.
Yes. So, and that's where what we are trying to do with like, American Eagle, with particularly quiet platforms, is actually solving that very fundamental problem. So we are building a brand new category called collaborative commerce network. If you look at why the shipping networks work so efficiently, there's collaboration, there's consolidation at the port, and when it gets out of the factory, it's one giant shipping network which is bringing the product into the country, and it is all interoperable. It's all trade moving on that ship. We don't have a system like that in US. Everyone is actually shipping.
But can we have a system like that? I know we've talked about this with you before.
Yes, very much so. Very much so. And that's what we've been proving so far. Like, when you hear Michael Rimpel talk, who's our chief operating officer, he was on the second quarter call, the third quarter call, and he mentioned it's unprecedented that we spent less money in 2022 than we spent in 2021. We spent less money in 2021 than we spent in 2020. Why? Because collaboration works. And collaborations across retailers on supply chain is the way of the future.
So tell us, how much can you drill down? Because we're talking at this high level, which is fine.
Yeah.
But so you're collaborating with who or what in terms of moving stuff around?
So we have 50 brand retailers on our platform, everyone from Saks, Steve Madden's, Fanatics, Saks. And so these are large customers who are actually doing business with us. And primarily what we are doing is we are aggregating, just like Uber, we are aggregating all of the packages and inventory which is headed in one direction, or fulfilling these packages closest to where people live.
But the thing that I don't get is it's not like, and I go back to Amazon because I think it's what a lot of people are familiar with. If you make two separate orders on Amazon, sometimes those two things show up in the same package. If I order something from American Eagle and something from Steve Madden, those are not going to show up in the same package, right?
That's what we are attempting to solve.
Are you attempting to have them show up in the same package?
We are attempting to solve. So we've designed, and this is something that we have basically conceptualized, designed, but you have to get to a certain scale for this thing to work.
But you need sort of like one identifying characteristic from the consumer in order to make sure that the Tim Stenevec who orders this is the same as my wife who has a different last name who's ordering this.
Yeah.
Right.
So we are doing, like, this has fundamentally happened in other industries. We have a concept called merge in transit. So primarily what it means is none of these networks, they're all push networks. When you actually buy something, you're pushing a package to like Tim's doorstep. The quiet platforms, which is a facility close to where you live, Tim, is able to take packages which are all headed to your door and then give it to one carrier so that one carrier delivers to your door in one box. And that's essentially what we're building out right now. If you listen to Carol Tomey talk, she talked about it like in a second quarter earnings call. She said the cost of last mile to your door, Tim, is $5.50 on cost basis. The next package she delivers to your door is 60 cents more.
Yeah. Okay, so Carol, I'm going to jump in here because I'm seeing this too with Uber, for example, and Uber Eats. If you order something on Uber Eats, they say, okay, you have X number of minutes to add something to your order from CVS, for example, which is along the way. And I'm not using the names correctly, but it totally makes sense because that incremental cost to get that thing to your door is cheap.
And imagine, right? You have, in the last 10 years, if you revolve the time back and look at it like what 10 years was like, you had probably one package from one carrier, delivered to your door. Now you have 10 packages coming from 10 different people with 10 different carriers showing up at your door.
We've only got about 40 seconds left here. So what's key in making this work? Like, I get it. So what is it that you have to have just a ton of people buy in and help support the infrastructure, or what?
Yes, this is like I will put it in the words of what the NRF president told. This is going to be game changing. What we're trying to do is going to But even if you don't put it in one box, but if all the packages which are headed to Tim goes to one carrier, you still get the efficiency of that delivery provider.
Love supply chains.
Yeah, it's pretty.
We love talking with you, Shaker.
And if we just put it all in metaverse and just buy metaverse things, like
virtual goods.
I have my own theory about metaverse for sure. You still need the physical world to execute on it.
Shaker, come back real soon. Shaker Natarajan, Executive VP, Chief Supply Chain Officer over at American Eagle. Thank you.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. United Airlines shares flying higher after hours, up now by 4.7%. UAL said first quarter profit will be more than double analyst estimates. Moderna says its vaccine against RSV was highly effective in preventing the lung disease in older people, paving the way for the company to seek its first approval outside COVID-19. After hours, Moderna up now by about 3%. Progress Software forecast adjusted revenue for the first quarter. The guidance to beat the average analyst estimate, but after hours, Progress Software down by 2.8%. Stocks lower today on concern over the outlook for corporate earnings. The S&P did manage to snap a 4-day rally. S&P down 8, ending the session at 39.90, down by 0.2%. The Dow hard hit today, down 391, down 1.1%. Goldman Sachs after earnings weighed on the Dow. Goldman today down 6.4%. Morgan Stanley after earnings up 5.9%. Nasdaq up 16, up 0.1%. 10-year yield 3.54%. Spot gold down $7 the ounce to 19.08, down 0.4%. West Texas Intermediate crude up 1.5%, 81.02 a barrel. So a down day for the U.S. stock market. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. As you all know, the annual meeting of the World Economic Forum, it's underway in Davos, Switzerland. All types of global leaders and thinkers are there, and that includes our next guest.
Yeah, we're very pleased to have back with us Richard Edelman, the CEO of the global communications firm Edelman. He joins us now from the World Economic Forum annual conference in Davos, Switzerland. Happy New Year, Richard. How are you?
I'm great. Happy to hear you guys.
Yeah, well, we're glad to have you back, and we're especially glad to have you on the ground from Davos because, as we've been talking about throughout the program, the first time it's being held in the winter in 3 years. Just give us an idea of what the mood is like there. What's the tone? What have you heard so far?
I think the most moving address today was by Mrs. Zelensky, who just talked about what it's like to live in Ukraine and the will of the Ukrainian people to fight back the Russian invasion, and that they're going to get their land back. And then Mrs. von der Leyen, who's the head of the EU, basically said, "We're standing with you until these criminals are brought to justice." I thought that was a huge moment of theater.
Yeah, I do feel like, you think about a year ago, right, Richard? I mean, we weren't at war yet. And yet it became such a big story.
And Carol, I think, nobody thought that it was actually going to happen. We look back in hindsight, Richard, and what we see is, a lot of people who thought, okay, Putin's not actually going to do this, and even if he does do this, it's not going to last well into a year. So apart from that, we want to talk economy too, because you have such great access to CEOs all over the world. Give us an idea of what you're hearing in terms of what the economic outlook is, and certainly Russia's invasion of Ukraine. It's a big part of that.
Well, I've been pleasantly surprised by the forecast by CEOs. I think the general tenor is, the U.S. may not have any growth, but won't go into recession. That Germany and the U.K. in particular will be challenged by high heating bills and inflation, and that China will come out of it sort of mid-year. More optimistic than I thought.
More optimistic. So that's so interesting, especially the European side of things. That's what I've been gleaning from the interviews that we've been airing and what I've been reading is the idea that 6 months ago, 3 months ago, the mood seemed a lot more pessimistic. And now, given who we're talking to, Richard, it seems like, okay, you know what? Given what we've heard from companies, what we've seen in the economic data, especially in the strengths when it comes to the jobs, the way that inflation has come down, maybe we can avoid a global recession.
It's possible. But again, I think the big challenge that we see in the trust barometer is really low trust in government. And we have an epic 50-point delta between competence of business and competence of government. 30 points on ethics. Business has come straight up in terms of ethics in the last 3 years. I think it's attributable to good behavior during the pandemic, a focus on ESG, and lastly, more than 1,000 companies getting out of Russia as a result of the invasion. So, that's a big story, that business is the only institution that's both competent and ethical.
Okay, so the trust barometer, you do them regularly. You mentioned it. It's a temperature check when it comes to government, when it comes to business, and more. Just for people who haven't heard you on our program before, don't necessarily know what the trust barometer is, who is it that you glean for insights here? Who's the pool?
So we do 28 countries. We've done 32,000 people interviewed in November, and we look at trust in business, government, media, and NGOs. And we've done it for 23 years. And the big story is that, 3 years ago, business became the most trusted institution, ahead of government and ahead of NGOs, and it continues. And the other big news is that, people really want CEOs to continue to speak up on societal issues. I know that there's been pushback on CEOs since Governor DeSantis on Disney and also, the Texas pension funds in West Virginia. But our study is very clear. We want CEOs to speak up on sustainability, diversity and inclusion, also on wages and reskilling, and on geopolitics like Russia. Other issues, you can leave.
That is really interesting. Richard, sorry, a little bit of a coughing attack here in studio. So good to hear your voice. It is interesting because I do wonder, when it becomes maybe a tougher economic outlook or tougher market environment, does everybody leave the doing good to the wayside? And you're saying no.
No, because 2/3 of employees say, I only want to work for companies whose values are similar to mine. 2/3 of consumers are belief-driven buyers. A lot of us are following Gen Z behaviors in terms of attitudes. And I think, Carol, that this is a fundamental change in expectations of business. And it's not just to make profit. Mm-hmm. They want you to do good business, but they also want you to somehow improve society. And you can do both.
I don't know.
You can be Discover Card and move 2,000 jobs to inner city Chicago as opposed to outsourcing those call centers to India.
But
that's a big deal.
What is the proof that people care about this? And I'm asking this, and not trying to be cynical here, but when we cover corporate earnings every quarter, we talk about top line, we talk about bottom line, we talk about revenue in different segments, we talk about the outlook. What we don't talk about is, and what doesn't move the needle when it comes to investors is, any sort of metric about social good.
So I think one of the mistakes of business is to have 180 different metrics for ESG. We should have one, and it should be universally accepted. And we should also have more brands report out on, okay, because I have a purpose, like Unilever actually keeps track of this. They say that the brands with purpose have 10% higher sales than the ones without. So again, these are care about.
I am curious, when you do these trust barometers, Richard, how does it jive with maybe the conversations you are hearing in Davos, or doesn't?
So today I sat around with a bunch of people in money management, and one of the really important conversations was about the green transition and, the necessity of there being public capital as well as private capital. And so I stuck my hand up and I said, well, if you're going to take public capital, then you're going to have a new audience, which is the public.
Yeah.
And the mass class divide on attitudes towards institutions is epic. It's nearly 25 points in the U.S. between the top 25% of earners and the bottom 25. That's the biggest it's ever been. And that's because people at the bottom have been really impacted by inflation. And, it's the heat or eat expression that you hear. And that's the real world of, what people are feeling. And so inequality and this idea of opportunity, that's what causes the United States to be moving into a place of polarization. And if you don't feel hope for the future, if you really feel, that you can't get there, then we're in a place of dysfunction.
Well, let's talk about solutions to this. If you were advising policymakers on ways to sort of decrease the delta that you found in the latest trust barometer. And Richard, this isn't the first time we've talked to you about this. I mean, this has been an issue that you've talked about for a couple of years now, at least. What would you advise them to do?
Well, first is I absolutely think that we've got to insist on business and government working together on privacy and security in data, or on retraining and reskilling. There's going to be a lot of job loss to automation in the next decade, and we have to upscale our community colleges. So business and government is number one. Number two, we've got to get quality information in the hands of people. There are too many people who've really written off experts during the pandemic, and they've written off government because they feel like they were lied to or something else, and they refused vaccines. Well, they're extrapolating that to other parts of their lives. We've got to get them back on the beam with, okay, here's the facts about, the new subway or whatever, and deliver. And then I guess the third thing is, I really think companies should stop supporting platforms in the media that spread this information. That's a really important thing. We've got to get facts in front of people.
Is there any media that you would say specifically is really problematic right now? And just got about 15, 20 seconds.
Well, I mean, again, you know, in the far extreme InfoWars and, you know, people like this.
Okay.
And so, again, good information yields trust, which enables action.
Richard, we've got to run. Enjoy your time at the World Economic Forum in Davos. Look forward to catching up with you again in the near future. Richard Edelman, CEO of Edelman from Davos.
Let's get to world and national news. Nancy Lyons is in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Mandatory action will not be needed for several months, but the debt ceiling is already creating a big divide between Republicans and Democrats. House Speaker Kevin McCarthy says he's willing to talk.
Let's put our house in order and how we're going to spend, and let's make the investments we need to make America stronger.
McCarthy and other Republican lawmakers say they will refuse to extend or suspend the debt limit until the federal government cuts spending. White House Press Secretary Karine Jean-Pierre says the White House is not willing to set conditions.
We're not going to work our way around this. We're not going to negotiate on this. This is the basic duties of Congress, is to deal with this issue.
Jean-Pierre says Republicans are willing to hold the nation's credit as a hostage to their demands to cut Social Security and Medicare. Turkey's President Erdogan is outraged the U.S. government is charging his state-owned bank with criminal sanctions busting. And today the bank asked the U.S. Supreme Court to drop the charges.
Justice Department lawyer Eric Feigen told the court the Turkish bank should go on trial for
evading our sanctions, funneling billions of dollars to an embargoed nation, and lying to our regulators.
Justice Brett Kavanaugh pointed out
this was President Trump and now President Biden agree, and part of the effort to prevent Iran from sponsoring terrorism, to protect the national security of the United States.
The bank's lawyer argued that Congress never authorized criminal cases against a subsidiary of a foreign government. In Washington, Irv Chapman, Bloomberg Radio.
The U.S. Supreme Court today turned away a Missouri appeal that sought to allow states to cut taxes even if they received $195 billion in federal pandemic relief money. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks snap a 4-day rally, and this update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds that 70 to 80% of small businesses are good candidates for taking the employee retention credit. Don't bother trying to navigate hundreds of pages of tax code to learn if your business qualifies for ERC assistance. Let the tax professionals at Innovation Refunds do the work and help you secure the future you want for your business. Learn more at getrefunds.com. United Airlines says its first quarter profit will be more than double analyst estimates as continued supply constraints across the industry combine with robust demand that shows no sign of slowing. After hours, UAL up by 2.6%. The S&P 500 index down 8 points today. Stocks fell as concern over the outlook for corporate earnings weighed on risk sentiment. The S&P was down 0.2%. The Dow down 391, down 1.1%. Goldman Sachs weighing on the Dow today. We had Goldman down 6.4% after earnings. Morgan Stanley also after earnings up 5.9%. Nasdaq up 16, a gain there of 0.1%. As for the overall market outlook, Dana Dioria is co-CIO of investment PMC, and she was our guest right here on Bloomberg Business Week.
There is a growing chorus, I think, around the notion that, second half of the year could pick up. And so, kind of in our space, talking to advisors, talking to, home offices, it really is about sort of having the discipline and hanging on and looking forward to that comeback.
10-year yield 3.54%, spot gold 19.08 the ounce, down 0.4%. West Texas Intermediate crude up 1.4%, 80.95 a barrel. Recapping S&P down 8, down 0.2. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, let's get right to our guest. Gabriella Rosen-Kellerman is Chief Product Officer over at BetterUp.
She's got a new book. It's called Tomorrow Mind, Thriving at Work, Now and in an Uncertain Future. She's with us right now via Zoom from Berkeley, California. It's good to have you with us, Gabriella. How are you?
Great to be with you guys.
So, Tomorrow Mind, what is it?
Tomorrow Mind is the mindset that allows us to thrive at work in an environment of incredible volatility and uncertainty, constant, unpredictable change.
All right, wait a minute. So put it in lay terms. You're sitting down to at a bar with a friend and you're explaining it, what it really means.
Right. So there's one world of work that our brains, quote unquote, are designed for, and that would be hunting and gathering. Every other kind of work we've done since has required us to adapt the same mental machinery to a new environment. And so today, as opposed to, say, with the adjustment to agriculture or to the Industrial Revolution, we have a scientific understanding of what our mind is, how it works, how to adapt it to these new environments, as well as a really well-informed perspective on how work is changing, how it's different today than it's ever been before. Well, if you put those two things together, you get the recipe for how to build the skills that we need to thrive despite the constant uncertainty and volatility by building these 5 skills that we're recommending.
It's interesting. You do think about like the things that are coming at us in our workplace. Whether it's the use of technology, electronics, social media, different things. It does feel like, I don't know, is it a more toxic workplace? Is it safe to say that?
Wait, how are you using toxic?
Yeah, exactly. Because I think about if you were working in a factory during the Industrial Revolution, that was a pretty tough environment.
Yeah, that was literally toxic to your health, right? The fumes, yeah. There have been a lot of painful moments in adapting to new worlds of work, and we try to draw lessons from that, actually. In terms of the kind of toxicity you're talking about, one of the things that goes wrong in these environments is we react to change with a sense of threat and fear. It can result in very antisocial behaviors. We also don't have the same kinds of deep and lasting relationships with colleagues that we once did. All of this allows us to come at work from a more centered, empowered place, a more connected place. We talk a lot about how to build trusting relationships across difference and quickly. But you're right, those factors are diminishing the fabric of connection and the fabric of positivity that would be wonderful to restore.
Look, I got to be honest. We work in a distributed world right now, and I feel a lot closer to my colleagues who I'm around physically, the ones who I see each and every day, than the ones who perhaps only come in a few days a week or maybe work in other offices around the world. And, when somebody comes to visit from another office, a few days with that person makes a really big difference, Carol.
I totally agree.
And so I'm wondering, Gabriella, how you're able to do this in an environment where people are working in hybrid environments.
Right. So you raise a, tremendously important point. When we're with people in person, that shared time and physical proximity is very valuable in helping us bond to them. And part of what we're doing is our brain is learning to process them as an us rather than a them. So someone in our in-group versus our out-group. And that is a huge basis of trust, which then makes work easier and lighter and more fun. And we actually are more innovative in that mindset. When we're working at distances, and we have to accept that that is a part of the reality of work today, it's going to be here to stay. We're working on distributed teams. Even if people who lived close to each other could co-locate, there's going to be colleagues who don't live there. That's just part of the nature of what it is to draw from a global talent pool. And so we get into a lot of the science of how do you still build that trust and connection across geographic distance. One of the keys comes down to shared time. So just as you have that shared time in person in the office, think about how little of that you have with people who are at a geographic distance. But when you're able to create it, doesn't have to be by Zoom, it can also be by phone. But that shared sense of experience, we're experiencing something together in real time, you're reacting, I'm experiencing your responses. All of that rich data is part of what allows for that bonding and that trust to form.
So I have to say, Gabriella, in our planning call this morning with our producer, Paul Brennan, one of the things, as he was talking a little bit about your book and we were talking about our coverage, is one of the things you talk about is why daydreaming is critical to thriving at work. I love that you go there. I'm someone who believes strongly in meditation. I'm not always good about doing it, but I've even talked to CEOs of well-known companies, or one in particular at a Bloomberg event, who I said, if you've got a few extra minutes, what do you do? Do you call up an important customer? Do you reach out to your employees? He's like, no, I kind of just sit there and meditate for a little bit, let my mind kind of have a moment to maybe think about nothing or what I need to be doing. So tell us about daydreaming.
Great. So daydreaming is very much a feature of the mind and not a bug. It's something that we need to do in order to generate our creative ideas, connections we can't come to. We can't force ourselves to come to those with conscious attention. That daydreaming is the activity of the default mode network, which is the brain network that activates when we're quote unquote doing nothing, when we think we're sort of just sitting around staring into space. And it actually activates every few minutes under normal circumstances. You kind of go in and out of that daydreaming. Even while we're talking now, people are going in and out of that daydreaming mode. It's really adaptive. It's really important. It's a huge part of where creativity comes from.
But we're taught to shut that down.
Right. Just where I was going to go. Unfortunately, a lot of our busy work today, whether it's Zoom meetings, Slacks, emails, horrible for daydreaming, right? And so to be able to give yourself permission to just take a few minutes and take a walk, meditating is fine. You want to do things that are not going to overly tax your conscious attention. So don't do hard math problems, but you could count by ones, you can hum a tune, things that sort of like keep you in it, but not overly. And so the attention and the energy is going to this mind wandering, connecting, drawing on memories type of activity.
And I will tell you, the individual is Anton Vincent. He's president of Mars Wrigley North America. And I know you, I think, over at, or the Better Up team has actually worked with Mars, one of the companies. So it was really fascinating. Something for us to think about, certainly in all work environments. So thank you so much for joining us. Gabriella Rosen-Kellerman, Chief Product Officer over at Better Up. And her new book out is, she's co-author on it, Tomorrow Mind, Thriving at Work Now and in an Uncertain Future. She joined us via Zoom from Berkeley, California. I'm into daydreaming.
Embrace the daydream. I love it.
I just need a little time.
That's the hard part.
This is Bloomberg.
It is 4:53 on Wall Street. Charlie Pellet with a look at today's company headlines. United Airlines shares are up after hours, up now by about 3%. It said first quarter profit will be more than double analyst estimates as continued supply constraints across the industry combined with robust demand that shows no sign of slowing. Moderna said its vaccine against RSV was highly effective in preventing the lung disease in older people, paving the way for the company to seek its first approval outside of COVID-19. After hours, Moderna shares, they are rallying now. They're up by about 5.7%. New York-based Goldman Sachs Group posted a bigger increase in expenses than analysts expected as it set aside more for compensation in the fourth quarter. Today, Goldman Sachs shares dropped 6.4%. We also heard from Morgan Stanley today. Its revenue narrowly beat analyst expectations on a wealth management record, even as the firm's traders fell short of estimates. Today, Morgan Stanley shares advanced by 5.9%. Sources tell Bloomberg Microsoft plans to delete jobs in a number of engineering divisions tomorrow. The magnitude of the cuts could not be learned, but the source says the reduction will be significantly larger than other rounds in the past year. Those cuts impacted less than 1% of the software giant's workforce of more than 200,000. Microsoft shares did advance today. They gained for a seventh day. Microsoft was up by 0.5%. And those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week. Let's get a check on the latest world and national news with Nancy Lyons in the 991 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. House Speaker Kevin McCarthy wants President Biden and Senate Democrats to sit down with Republicans as soon as possible to begin discussing controls on federal spending and lifting the nation's debt limit.
Let's sit down and find a place that we can protect Medicare and Social Security for the future generations. Let's put our house in order in how we're going to spend, and let's make the investments we need to make America stronger.
Republicans have been demanding deep spending cuts as the price for an increase in the federal debt ceiling, but Biden and congressional Democrats want the limit to be increased without conditions. President Biden this afternoon hosted the Golden State Warriors at the White House. Ahead of the big event, Coach Steve Kerr spoke with reporters at today's press briefing.
On behalf of the Warriors, I want to thank President Biden and Vice President Harris for the invitation to come to the White House today to celebrate our championship from a year ago. It's a great reminder of how lucky we are to be Americans.
Kerr says he also appreciated being part of a roundtable discussion today concerning gun control, which he says is an issue that's important to him. This is the team's first visit since Barack Obama's presidency, even though they won twice during President Trump's tenure. One year, Trump rescinded an invitation. The other year, the team decided to focus on community service. Well, with Russia continuing to pound civilian targets, the head of the United Nations nuclear watchdog says inspectors will be staying in place at Ukraine's nuclear power plants to prevent a potential nuclear disaster.
We are leaving now a group of experts who are going to be staying here permanently, and it will be the same in all these other places.
Rafael Grossi is Director General of the International Atomic Energy Agency. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nancy, thank you so much. Well, coming up in just a few minutes, Joe Matthew, he's the host of Bloomberg Sound On right here on Bloomberg Radio. So, Joe, you know, something that I feel like is getting a lot more momentum is that the case the GOP seems to kind of consistently make against corporate wokeism.
Yeah, boy, isn't it? And it coincides with the conversations we're hearing from Davos. And fascinating to see in a new piece of research, and maybe it's not that surprising to you, that people trust corporations more than governments or elected officials. There was a time when that was the other way around.
Did you listen to our conversation with Richard Edelman?
As a matter of fact, we're going to talk about that research and add it to, it's an interesting wrinkle on that. The guest list for Kevin McCarthy's big fundraiser for next month. It's chock full of big business. It's representatives from corporate America. It's Washington names tied to corporate America that make you question whether the divorce between the Republican Party and corporate America was ever real to begin with.
Right.
Is something you play against one against the other.
Is it to lecture them, or is it to say, we love you, send me your money?
Well, that's right. It's a little bit, and ask Ron DeSantis. You know, the whole war on Disney is the ultimate example of that, and that's where we're going to start our conversation with Lester Munson coming up from BGR Group. He's one of these guys at the center of Washington and corporate America.
Well, we did speak to Richard Edelman from Davos, Joe, and he said that one of the most poignant things that he's heard thus far was President Zelensky from Ukraine, his speech so far this week. You guys are talking national security, too.
Yeah, as a matter of fact, we are, and whether Germany is going to step up. That was another major conversation out of Davos today. Olaf Scholz exclusively with Bloomberg. Is he going to